Ladies and gentlemen, imagine this. You wake up one day and discover that a simple, tangible asset you've been stacking quietly has placed you in a club most people never even think about. A club where only the top 1% of silver holders get to stand. You might think you need wheelbarrows of silver, tons upon tons, to even approach that elite tier. But what if I told you the number is far smaller, far more achievable, and far more realistic than most stackers ever consider? Today we're tearing through the myths, the hype, and the internet noise. I'm going to give you the complete breakdown, the real numbers, the real context, and the exact amount of silver you need to legitimately qualify as one of the top 1% of silver holders in the world. Picture this for a moment. You're scrolling through headlines, watching markets swing wildly, currencies lose purchasing power, and uncertainty become the new normal. Most people feel overwhelmed by it. They assume that real financial positioning is reserved for institutions, insiders, or the ultra-wealthy. But here's the truth. Most never stop to consider. Extraordinary positioning doesn't always require extraordinary wealth. Sometimes it simply requires understanding scale, scarcity, and perspective. When people hear top 1%, their minds immediately jump to private jets and offshore accounts. But in the world of physical silver, the math tells a very different story. This isn't about ego or status. It's about relative ownership in a finite market. Silver is not infinite. It's mined, consumed, and removed from circulation every single year. And unlike digital assets or paper promises, once it's gone into industrial use, a large portion of it never comes back. Now, here's where things get interesting. The global population is massive, but the number of people who actually hold physical silver is surprisingly small. Narrow that group down even further to those who hold meaningful quantities, and the crowd thins fast. That's the gap most people miss. They assume competition is fierce when in reality participation is limited. That's why the idea of the top 1% in silver ownership is far more attainable than it sounds. Think about it logically. The majority of the world lives paycheck to paycheck. Many have no savings at all, let alone hard assets. A smaller percentage invests, and an even smaller percentage invests in precious metals. Within that group, most hold only a few ounces, maybe a handful of coins bought during moments of fear or excitement. Very few commit to consistent accumulation over time. That's where separation happens. This isn't about panic buying or chasing headlines. It's about steady, deliberate action in a market most people ignore until it's too late. Silver doesn't move like a tech stock that doesn't trend because of hype alone. It moves because supply tightens, demand grows, and confidence in fiat systems iridesces. Those forces don't announce themselves loudly. They build quietly in the background. And that's why understanding how little silver it actually takes to rank among the top holders globally is such a wake-up call. We're not talking about fantasy numbers. We're talking about amounts that are achievable for disciplined individuals who prioritize long-term protection over short-term gratification. The difference between the average holder and the top tier isn't luck, it's commitment and foresight. Most people wait for confirmation. They wait for prices to surge, for news to validate their fears, for someone else to go first. By the time that happens, the easy positioning is gone, the premiums rise, availability tightens, and suddenly what once felt unnecessary feels urgent. That's the cycle that repeats over and over again. The reality is simple. Positioning early in a scarce asset doesn't require perfection. It requires awareness. When you understand that silver ownership is highly concentrated among a very small segment of the population, the entire conversation shifts. You stop asking, is this too much? And start asking, is this enough? That's a powerful mental shift. This is about leverage without debt, security without counterparty risk and control, in a world that's steadily moving toward less of it. Silver doesn't promise overnight wealth. What it offers is something far more valuable, really. And resilience is what quietly places people ahead of the curve while others are still debating whether the curve even exists. When you truly grasp how few people are participating, how limited the supply is, and how modest the threshold can be to stand far above the average, the noise fades. The decision becomes clearer. You're no longer wronger to fear or hype. You're positioning with intent. And that's the mindset that separates those who talk about being prepared from those who actually are. Let's strip emotion out of this and look at it the way the market actually works through numbers, scale, and distribution. Because once you understand the math, a lot of assumptions fall apart very quickly. Most people wildly overestimate how much silver the average person owns, and they massively underestimate how concentrated ownership really is. Start with the global population. We're talking about billions of people. But here's the key point. The vast majority of them own zero silver, not a coin, not an ounce, nothing. In many parts of the world, access alone is a barrier. In others, awareness is the issue. And in developed economies, people are heavily conditioned toward digital assets, stocks, pensions, and property. Physical silver simply isn't part of the conversation for most. Now narrow the field. Out of everyone on the planet, only a small percentage owns any form of investment-grade silver. Narrow it again to those who hold physical silver personally. Not ETFs, not pooled accounts, not paper exposure, and the group gets even smaller. This is where perception starts to break from reality. People imagine millions of heavy stackers competing with them. That simply isn't the case. Then look at typical ownership levels. Most physical holders own very little. A few coins bought as gifts, a tube picked up during a spike in fear, maybe 100 ounces accumulated over several years. There's nothing wrong with that. But statistically, it places them very close to the bottom of the ownership curve, not the top. Here's where the numbers start to matter. When you break ownership into tiers, the distribution isn't smooth, it's steep. A tiny group holds a disproportionate amount of available silver, while the vast majority hold almost none. That means the line between average and top tier is far closer than people think. You don't need an industrial vault. You need consistency and scale relative to everyone else, not relative to an imaginary benchmark. Another factor most people ignore is how much silver is actually investable. Yes, there are billions of ounces above ground, but a large portion of that is locked away in industrial applications. Jewelry or long-term holdings that aren't coming back to market easily. Investment-grade silver that's liquid and available to stackers is a much smaller pool. That's the pool that matters. When you divide that limited supply among a very small number of serious participants, the picture becomes clear. Ownership concentration rises fast. Someone who steadily accumulates over time doesn't just move forward. They move past an enormous number of people who never even enter the race. This is why royal counts matter more than price in the long run. Price fluctuates, ounces accumulate while others are distracted by short-term moves. Disciplined stackers are quietly increasing their share of a finite resource. And because participation is so low, each additional ounce moves the needle more than people realize. Another overlooked detail is behavior. Most people buy silver reactively. They buy after a price surge, after a crisis hits the news, after availability tightens. Then they stop. That start-stop behavior keeps their tail holdings low. The top tier doesn't operate that way. Accumulation happens during calm periods, during pullbacks, when interest is low and premiums are reasonable. That behavioral difference alone creates massive separation over time. When you step back and look at the data, the conclusion is unavoidable. Being among the top silver holders globally is not an extreme outcome. It's a mathematical one. It's the natural result of participating in a market most people ignore and doing so with discipline instead of emotion. This isn't theory. It's distribution, it's supply versus ownership. And once you see it clearly, the idea of the top 1% stops sounding exclusive and starts sounding practical. The barrier isn't wealth, it's understanding. And understanding changes behavior long before it changes results. That's why those who take the time to look at the real numbers, not the headlines, not the hype, tend to act earlier, move steadily, and end up far ahead of the curve without ever needing to rush. There's a psychological layer to silver stacking that rarely gets discussed, but it's one of the most important elements separating casual holders from those who quietly build serious positions. Most people think this game is about predicting price. It isn't. Price is just the visible surface. The real driver is behavior. How people react to uncertainty, boredom, fear, and time. Silver has a unique characteristic that works against the average participant. It spends long periods doing absolutely nothing. No excitement, no headlines, no adrenaline. And during those quiet stretches, most people lose interest. They stop buying. They move on to something more entertaining, something that feels productive. That's not a flaw in silver, that's the filter. It naturally removes weak hands before scarcity ever becomes obvious. The average person wants validation before action. They want price confirmation, social confirmation, media confirmation. They want to feel late but safe. Silver rewards the opposite mindset. It rewards patience without applause. It rewards accumulation when nobody is watching. And that's uncomfortable for most people because it feels like doing nothing, even though it's the most productive phase. This is why ownership remains so thin. It's not because silver is inaccessible. It's because it's boring when it's behaving exactly the way it should. During these periods, disciplined stackers are steadily increasing their share while everyone else is distracted. And that's where the separation really begins. Another mental trap people fall into is comparing themselves to extremes. They see images of massive hoards online and immediately feel behind. That comparison is misleading. Those images represent a tiny fraction of holders, not the standard. When you compare yourself to the global population instead of social media outliers, the picture changes dramatically. Suddenly, consistent accumulation looks powerful instead of inadequate. Silver stacking is less about ambition and more about endurance. Anyone can buy aggressively during a panic. Very few can buy calmly during stability. That's why most holdings are built inefficiently in bursts at higher prices under emotional pressure. Over time, that behavior limits how far most people ever progress. There's also a false belief that you need a perfect strategy to succeed. You don't. You need a repeatable one. Small, regular additions made over years outperform sporadic large purchases driven by fear. That consistency compounds quietly, not just in ounces, but in mindset. You stop thinking like a buyer and start thinking like an owner. Ownership changes perspective. Once silver becomes a long-term position instead of a trade, short-term price moves lose their power. Volatility becomes noise. Pullbacks become opportunities. That emotional shift is critical because it allows accumulation to continue uninterrupted, and uninterrupted accumulation is what pushes people into the upper tiers without them even realizing it. Another overlooked factor is how few people actually stick with it. Many enter the silver market once or twice in their lifetime. They buy a little, sell a little, then exit. Very few maintain a multi-year regimen. Attrition is constant. People drop out quietly. That means the longer you stay engaged, the fewer peers you're actually competing with. Time is the most underestimated advantage in silver stacking. Not timing, time. Each year you remain consistent. Your relative position improves automatically because others quit, pause, or never start. You don't need to outperform anyone. You just need to outlast. This is why the concept of the top 1% in silver ownership isn't dramatic. It's almost inevitable for those who understand the psychological game and refuse to play it emotionally. The bar isn't set by brilliance. It's set by discipline. Silver doesn't test intelligence. It tests patience, to test conviction during quiet markets and restraint during loud ones. Those who pass those tests slowly accumulate something far more valuable than metal alone. They accumulate position. And position is what matters when systems strain, when confidence fades, and when people suddenly realize that tangible ownership isn't optional. It's foundational. By the time that realization spreads, the distribution is already set. The positions are already taken. And those who understood the psychology early don't need to rush. They're already where they need to be. Action is where all of this either becomes real or stays theoretical. Everyone can understand the logic, agree with the numbers, even recognize the opportunity. But very few translate that understanding to consistent behavior. That's the final dividing line, not knowledge, not access, execution. Most people overcomplicate stacking because they think sophistication equals success. It doesn't. Simplicity wins in markets where time and scarcity do the heavy lifting. The goal isn't to outsmart the market. It's to position yourself so you don't have to. That means building a plan that works whether prices are exciting or boring, rising or drifting sideways. The first mistake people make is waiting for the right moment. They want perfect entries, perfect signals, perfect clarity. That moment rarely arrives. Markets don't reward hesitation. They reward participation over time. Simple accumulation plan executed steadily will outperform a brilliant plan that's never fully acted on. Silver rewards those who move while others wait. Another mistake is focusing too much on price and not enough on ounces. Price is temporary, ounces are permanent. When your objective is ownership, not speculation, pullbacks stop feeling like threats and start feeling like earnings. That shift alone changes how consistently you accumulate. You stop reacting and start operating. Practical stacking isn't glamorous, it's repetitive. It's buying when interest is low, when nobody is talking about silver, when headlines are focused elsewhere. That's exactly why it works. When attention eventually returns, availability tightens and premiums rise. But by then, the bulk of the work is already done. The heavy lifting happens in silence, storage, and structure in matter too. But they don't need to be complicated. Secure, private, and accessible beats elaborate setups every time. The objective is control. Physical ownership removes counterparty risk, removes reliance on systems, and removes the need for permission. That's not an abstract benefit. That's real-world positioning. Diversification within silver also matters more than people realize. Different formats serve different purposes. Some are about liquidity, some are about efficiency. A balanced approach allows flexibility without sacrificing accumulation. Again, this isn't about perfection, it's about resilience. What often goes unspoken is that stacking silver also builds discipline. It trains you to delay gratification, to think in years instead of weeks, to value substance over excitement. Those habits spill into other areas of life. You become less reactive, less influenced by noise, more grounded in long-term thinking. That's not accidental. That's a byproduct of owning something real in an increasingly abstract financial world. The people who end up in the upper tiers of ownership rarely feel like they're doing anything extraordinary. They're just consistent. They make silver part of their financial rhythm instead of a reaction to fear. Over time, that rhythm compounds. While others start and stop, question and hesitate, disciplined stackers quietly move ahead. This is why reaching the top tier doesn't require extreme income or rare opportunity. It requires alignment between intention and action. When accumulation becomes automatic instead of emotional, progress accelerates without stress. You stop measuring every move and start trusting the process. Eventually, there's a moment of realization. You look back and recognize that what once felt slow has added up to something meaningful. Not because of a single bold decision, but because of hundreds of small ones executed calmly over time. That's how real positioning is built. And when conditions change, when confidence in systems wavers, when demand surges, when physical assets are no longer an afterthought, you don't need to scramble. You don't need to chase your rarity position. That's the quiet advantage of doing the work early. Not loudly, not emotionally, just consistently. Silver doesn't reward urgency. It rewards preparation. And preparation done right puts you exactly where you want to be long before the rest of the world realizes why it matters. At the end of the day, this isn't about predictions, hyper trying to be right in the short term. It's about positioning yourself in a world where certainty is fading and tangible ownership is becoming increasingly rare. Silver doesn't need a narrative to work. It only needs time scarcity and human behavior to do what it has always done. Most people will continue to debate. They'll wait for confirmation, for headlines, for permission. And while they're waiting, the distribution doesn't pause. Ownership keeps concentrating. Supply keeps tightening, and those who understood the opportunity early continue to strengthen their position quietly. There's no urgency in this message, only clarity. You either recognize how small the ownership pool really is, or you don't. You either act consistently, or you remain exposed to systems that depend entirely on trust. Silver gives you an alternative, not overnight transformation, but long-term stability. The top tier isn't built through panic or perfection. It's built through calm decisions made repeatedly over time. That's how real advantage is created. Not loudly, not emotionally, but deliberately. So whether you're just starting or already well on your way, remember this. The gap between average and prepared is far smaller than most people think, and it closes faster than they expect. Those who understand that don't rush. They don't hesitate either. They simply position themselves and let time do the